Welcome to the deep dive. Think for a moment about maybe your last year of shopping, or just how you've interacted with any business, really. Chances are the internet was involved somehow, right?
Yeah.
Researching, buying, maybe sending an email with a question.
Absolutely. It's not just a trend anymore. It's everywhere. That whole 2047 idea is deeply woven into, daily life and definitely how businesses operate now.
For sure. And that's what we're diving into today.
Exactly. Today, we're doing a strategic deep dive into e-commerce, digital markets, and digital goods.
And our mission here, especially for you listening from the Dr. Sampak College of Business, is to give you a really solid grasp of what makes e-commerce tick.
Right. We want to cover its unique features, the different business models out there, and how it's just completely changing marketing and B2B stuff.
We're drawing on a foundational text in management information systems, but this isn't just theory, is it?
Not at all. The goal is practical insight, stuff you can actually use in your careers.
Okay, so let's unpack this, starting with the internet itself. Why was it the, quote, perfect vehicle for e-commerce? What made it so different?
It really comes down to its open standards and structure. Nothing before it could connect people and distribute information so cheaply, so easily.
So like a massive connector.
Pretty much. It links customers, suppliers, even internal teams globally. And this does something interesting. It lets big companies act kind of small and nimble.
And small companies.
Small companies can suddenly act big, get that global reach, that scale that used to be just for the giants.
That's a huge shift. But, okay, for a business leader listening, just being online isn't enough, right? There's a challenge there.
Oh, definitely. The core challenge is making your web stuff easier and more convenient than the old ways, and critically, better than your competitors.
If it's clunky or difficult.
People just leave. They won't stick around. User experience is absolutely key.
And that focus on user experience seems to be driving this newer landscape, social, mobile, local, or SML e-commerce.
Yes, we're seeing a big convergence there. Mobile phones especially. They're becoming the main way people access information and buy things.
So strategically, what does that demand from businesses? You can't just shrink your website anymore.
No, you really have to think mobile first. Redesign the experience. And it also fuels this idea of conversational commerce.
Moving beyond just ads.
Exactly. It's about listening, discussing, interacting, actually engaging with customers. Savvy marketers are joining the conversations already happening about their brand.
That engagement piece feels critical. Okay, let's dig into what makes e-commerce fundamentally different. There are these 8 unique features everyone needs to get. First up, ubiquity.
Right. And it's more than just being open 24/7.
What are the deeper implications then?
Ubiquity changes everything about customer expectations. Transactions anytime, anywhere. It shifts the whole sales process, enables impulse buys, global reach, things that were, frankly, impossible before.
Businesses have to completely rethink sales cycles.
Totally. Optimize for that instant access.
Okay, number 2 builds on that. Global reach. It just kind of erases geography.
It really does. Think about ordering, specialty beef from Montana when you live in New York.
Right. So it opens up new customer bases. But it's more than that for the business, isn't it?
Oh, yeah. It forces you to think about global supply chains, localized marketing, fulfillment, all without needing physical stores everywhere. It expands choice for consumers and the potential market for businesses.
And the reason this all scaled so fast is feature number 3. Universal standards.
Absolutely key, because it's built on global technical standards everyone agrees on.
It lowers the barrier to entry.
Massively. Businesses don't need proprietary tech. And for consumers, search costs plummet. You can easily compare stuff across different sites using tools you already know. It's a win-win, really. Fuels growth.
4th feature, richness. This is about the depth and complexity of the message, right?
Yes, but the strategic power isn't just more info. It's the sophisticated analytics it enables.
How so?
Well, consumers get way more detail, sure. But merchants collect vast amounts of data on behavior. And that's not just looking back. It's predicting needs, maybe even creating demand with super targeted offers.
Okay, number 5, interactivity. E-commerce wasn't always interactive.
No, early websites were pretty static, like reading a brochure online.
But
now it's dynamic. Two-way communication. Businesses can build relationships through real-time chat, feedback, personalized interactions that builds loyalty in a way static messages just can't.
Which leads nicely into information density, just the sheer amount of information available.
Right. And this cuts both ways.
For consumers.
Huge benefit. Price transparency. You can comparison shop instantly.
Yeah.
And cost transparency, sometimes seeing the actual cost behind the price.
And for merchants.
It's the engine for price discrimination. They can adjust prices dynamically based on real-time market data, even individual user profiles.
Which brings us right to number 7, personalization and customization. Trying to recreate that local shop feel online.
Sort of, yeah. Using tech to tailor the experience just for you. Personalized recommendations, content, maybe even pricing.
Scaling intimacy, basically.
Exactly. But it requires serious data infrastructure and smart algorithms. The payoff in loyalty, though, can be huge.
And the final feature, social technology, user-generated content, social networks.
This just blows the lid off physical neighborhood boundaries. Word of mouth goes global. Power shifts towards user reviews and content. Businesses can build communities around their brands, leveraging that collective influence worldwide.
Look, those 8 features really change the game. And they lead to some key concepts in digital markets.
Yeah.
Let's talk about information asymmetry.
Ah, yes. The classic example is buying a used car, right? Or maybe insurance. The seller traditionally knows more.
And the internet flips that.
It shrinks the asymmetry massively in favor of the consumer. You can research car histories, compare loan rates, get insurance quotes online in minutes. Even if you end up buying offline, you're armed with way more info.
So you can negotiate better deals. Forces businesses to be more transparent.
Precisely. It empowers consumers.
And related to that, lower search costs for us, the buyers. No more driving store to store.
Right. And for merchants, lower menu costs. Changing prices or info online is way cheaper and faster than printing new catalogs or menus.
Which enables dynamic pricing. Adjusting prices on the fly based on demand or user data.
Exactly. Very powerful. Another big outcome is disintermediation, cutting out the middleman.
Like airlines cutting out travel agents.
Perfect example. Or insurance companies selling direct, bypassing local agents. For companies, it can boost profits. For consumers, maybe lower prices, but often it's more about convenience and direct access.
Okay, shifting from services to goods, digital goods, music, books, movies, software, things you can digitize.
Huge strategic advantages here for producers.
Like cost.
Immense cost advantages. Cheaper, long-run production and distribution costs are practically zero compared to shipping physical CDs or books.
That must open doors for smaller creators.
Absolutely. Independent artists, filmmakers, they suddenly have cheap global channels to reach audiences directly. It's a game changer. And you see ad money pouring out of traditional media into these digital platforms.
Okay, let's pivot to how these digital firms actually operate. The business models and revenue models.
Right.
We usually think of B2C, business to consumer.
Right, the online stores we all use. It's the most visible.
But it's not the biggest piece of the pie, is it?
No, not by dollar amount. B2B, business to business, involves far larger transaction volumes. Think supply chains, procurement, complex stuff.
And then there's C2C.
Consumer to consumer. Platforms like eBay or Etsy, they give individuals massive geographic reach compared to, a local garage sale or classified ad.
And driving all of this increasingly is mobile commerce or m-commerce.
Huge driver. We talked about mobile first. And apps are critical. What was that stat? 66% global mobile ownership, 90% of phone time is in apps.
Wow. So for you as future leaders, apps aren't just a nice to have.
No way. They're powerful tools for branding, customer acquisition, think loyalty programs, coupons, and direct sales. They make everything easier right there on the phone your customers constantly use.
Okay, let's break down some specific e-commerce business models, how companies do business. What about the portal model, like early Yahoo?
Right. They started as search engines but evolved. Now they offer news, email, shopping. They make money from ads, referral fees, sometimes premium subscriptions. It's about attracting and keeping a massive audience.
Then the classic e-tailer.
Yeah.
The online storefront.
Yeah. Could be a tiny niche shop or a giant like Amazon. The key is 247 convenience, but also efficient logistics and a smooth user experience.
Content provider. Selling intellectual property.
Exactly. Music, books, video, news. Often through subscriptions or streaming. Big challenge is standing out when there's so much content available.
Transaction broker processing payments or bookings.
Yes. Think online travel sites, financial services. They save you time and money by handling the transaction efficiently and securely.
And market creator, like Uber or Airbnb.
They build the platform connecting buyers and sellers directly, often part of the sharing economy. Their value comes from network effects. The more users, the better the platform.
Service provider offering online services.
Things like photo sharing, data backup, online software. Value is convenience, scalability, maybe security.
And finally, community provider.
Yeah.
Social networks.
Yeah, creating spaces for people to connect, share interests, maybe even buy and sell within that community. Engagement is key. Think Facebook groups or forums.
Okay, that's how they do business. Now, how do they make money? The revenue models. Advertising seems the most common.
It is very widely used. Charge advertisers based on eyeballs and engagement time. The trick is balancing ads with a good user experience.
Then simple sales revenue.
Just selling products, information, services directly. Need secure payment systems, obviously. Micropayments can be tricky but important here.
Subscription revenue, like Netflix or a digital magazine.
Yep, ongoing fees for access. Requires consistently delivering value so people don't cancel.
What about freemium? Gives them away, charge for more.
Very popular, especially for software or content. Basic version is free, premium features cost money. The big challenge, converting those free users into paying customers. People kind of expect free stuff online.
Transaction fee revenue.
Taking a cut for enabling or executing a transaction. Common in fintech, payment platforms, even crowdsourcing sites. You're monetizing the facilitation.
And lastly, affiliate revenue.
Getting paid to send customers to other sites, referral fees, or a percentage of the sale if someone buys after clicking your link, leveraging your audience.
Okay, let's shift gears slightly to marketing. E-commerce has totally transformed it, hasn't it?
Completely. The internet gives you ways to reach millions, often way cheaper than traditional offline methods.
One interesting strategy is long-tail marketing. Can you explain that?
Sure. Instead of just marketing blockbuster products, the internet lets you efficiently target niche markets for less popular items. Think very specific hobby supplies or obscure books.
Because the cost of reaching those small groups is lower online.
Exactly. It saves money for the seller and connects niche customers with products they actually want.
Now, this next one is huge for business leaders. Behavioral targeting. Businesses collecting tons of data about what we do online.
Oh, yeah. Millions and millions of pieces of data. They track where you came from, where you go, what pages you look at, how long, what you click, what you buy.
Even your operating system, browser, personal data, too.
Often, yes. Email, address, credit card info if you buy something. It drives home the point. The internet is not anonymous.
So what's the strategic value of all that data for businesses?
It's massive. They use it to see if their website works, create personalized pages. Amazon's recommendations are a classic example. Improve the customer experience, add value. Advertising networks help collect this data cheaply across many sites, too.
And sometimes the ads just blend right in. That's native advertising.
Right. Ads designed to look like the regular content on a social media feed or news site. Less intrusive, potentially more effective.
Which brings us to social e-commerce and social network marketing. Using the social graph.
Yeah, leveraging those connections, friends of friends. Recommendations from people you know are powerful, often more trusted than a generic search result.
So marketing shifts focus.
A bit, yeah. From just building brand awareness towards generating leads and actual sales, shortening that path to purchase. And mobile is dominant here. Remember that 79% of online orders via mobile back in 2018. It's likely higher now.
And we're seeing innovations like dynamic websites, VR, AR, starting to appear in shopping too.
Definitely. Businesses use social networks to talk with customers, listen to feedback, show video ads, build whole marketing channels.
This connects to the wisdom of crowds. How could businesses tap into that?
By trusting that large groups collectively often make better decisions or predictions than individuals, even experts. Businesses use this for better decision-making, refining marketing, getting customer feedback that's often more reliable and cheaper than old-school market research.
And a specific way to do that is crowdsourcing.
Exactly. Presenting a problem or asking for ideas on social media or dedicated platforms, you let the crowd offer suggestions, advice, feedback, often for free. It's a cost-effective way to get diverse thinking.
Okay, let's turn to the huge area of business-to-business, B2B transactions. E-commerce changed this drastically too.
Oh, fundamentally. Before the internet, B2B was often about long-term, geographically limited relationships, maybe using EDI, electronic data interchange.
Which is a proprietary system, right?
Yes, kind of clunky and expensive. The internet, with its open standards, is gradually replacing EDI for procurement, making things more flexible and cheaper.
And this created new B2B models, like online private industrial networks.
Right, or private exchanges. These are networks often run by a major company, connecting it digitally with its suppliers and partners. Streamlines the supply chain.
More efficient for that specific network.
Correct. Then you have net marketplaces, or e-hubs.
What's the difference?
Net marketplaces bring together many different buyers and sellers in one online space. Think of it like an online B2B mall.
That must create huge cost savings.
Potentially, yes. Buyers can easily shop around for the best prices. Sellers can automate transactions and reach way more buyers. This works for direct goods materials used in production and indirect goods, like office supplies.
And these marketplaces can be vertical or horizontal.
Right. Vertical markets serve one specific industry, like automotive or chemical. Horizontal markets provide goods and services needed by many industries, like office supplies or HR services.
That Staples example you mentioned earlier fits here, right? They went beyond selling supplies.
Exactly. They became an online exchange, partnering with other providers to offer services like payroll, HR, legal stuff, leveraging their platform to create new efficiencies for business customers.
It seems a key lesson after the dot-com bust was less about abandoning e-commerce and more about planning it better.
Absolutely. Companies realized they needed solid plans, focusing on stability, security, and a clear return on investment for their digital efforts, not just rushing online because everyone else was.
Okay, let's zoom in on m-commerce again for a deeper dive. Mobile phones are basically powerful computers we carry everywhere.
Pretty much. And location-based services, LBS, are a massive growth area built on that.
What kinds of LBS are strategically important?
Well, there are geosocial services, checking in, finding friends nearby, like Foursquare used to be big for. Then geo-advertising, getting promotions pushed to your phone when you're near a specific store.
And geo-information.
Getting info relevant to your current location instantly, like seeing house prices on the street you're walking down, or details about a museum exhibit you're standing in front of.
Super useful. But privacy concerns are big here.
Huge! As future business leaders, you have to understand the nuances of location data, who controls it, the carrier, the phone's operating system, the app. Users need transparency and control.
Beyond location, what else is key in m-commerce? Mobile banking has exploded.
Exponential growth. Over half of Americans use it now.
Why the rapid adoption?
Two big reasons. For banks, it drastically cuts costs. Processing a check costs dollars. A mobile transaction costs pennies. For customers, it's just incredibly convenient, 24/7 access, no need to travel to a branch.
So banks have to offer good mobile experiences now.
It's table stakes. They need to keep adding features customers expect just to stay competitive.
And we should briefly mention mobile app payment systems, NFC, QR codes, peer-to-peer payments.
Right. Those have become standard ways to pay, further cementing the phone's role in commerce.
Okay, final section. For our listeners thinking about launching or improving an e-commerce presence, building a successful e-commerce presence, it's way more than just design, isn't it?
Oh, absolutely. Just pounding the keyboard on design is the wrong approach.
So what are the critical first steps? Where do you start?
It has to start with clear business objectives. What are you actually trying to achieve? Only then can you pick the appropriate technology that helps you meet those goals.
So objectives first, tech second, not the other way around.
Please, yes, so many get that wrong.
And developing an e-commerce presence map can help structure this thinking.
Exactly. It forces you to think through the whole process before you even think about colors and fonts.
What kind of decisions does that involve?
It involves getting a diverse team together, marketing, IT, finance, operations, to decide on hardware, software, telecommunications needs. Crucially, do you build it in-house or outsource? What about payment systems? Hosting do-it-yourself or use a provider who handles maintenance, updates, security monitoring.
It's a lot to consider up front.
It is, but planning like this, using maybe a framework like that presence map idea, saves enormous time, money, and headaches later. It maps out the alternative.
And part of that planning is a timeline with milestones.
Essential for tracking progress, keeping things on schedule, making adjustments. It proves that strategic thinking up front is really the foundation for any successful digital project.
So for you, our graduate student listeners, grasping these strategic points is really vital.
Absolutely. E-commerce isn't just a side channel anymore. It's fundamental to how markets work, how you interact with customers, how businesses operate day to day.
Right. We've hit those 8 unique features, the different business and revenue models, the huge shifts in marketing like long tail and behavioral targeting, the B2B transformation.
And importantly, that need for careful strategic planning before you build anything. These aren't just academic concepts. They're tools for navigating the digital economy you're about to lead in.
It really feels like all these technologies are just completely intertwined with business now. It's not optional.
Not anymore. Engaging effectively with digital channels is basically a prerequisite for staying competitive. It demands a proactive, really analytical approach from leaders like yourselves.
So here's a final thought to leave you with. Given how fast everything changes, how sophisticated e-commerce tech is becoming, think about emerging trends like AI-driven personalization or immersive commerce with VR and AR. How might businesses proactively use these not just to keep up, but to actually redefine customer expectations and gain a real competitive edge in, say, the next 5 years?
That's the big question, isn't it? Something to definitely ponder.